Good morning, everybody, and this is your Dow Jones day trade setups for today. So I'm not convinced that we have a direction here, to be honest. So I was sort of convinced yesterday that we had this potential head and shoulders, inverse head and shoulders here, and did take a trade, but got stopped out pretty quickly on this one. For all intents and purposes, we are in between the moving averages, and look at the oscillators. They are sort of crossing over and pointing to the downside. So instead of a inverse head and shoulders, this is starting to look like a flag of sorts, and that would be a bear flag. So strong move down, consolidation flag, and we're kind of at the 61.8 Fibonacci as well. We do have overhead resistance here, but again, we didn't quite bounce off a level that I would have expected. So I was looking for a long up onto 34 to 60, but that did not materialize. So we do have buyers coming in here, but we've also got sellers coming in. So yeah, I think we're waiting for earnings. So we had retail sales come out, which was fairly good yesterday, but then we're waiting for earnings just to verify what some of the economic data is looking like. And there's lots of screaming and shouting from the Feds about a soft landing and that everything's starting to look hunky-dory. But the markets are forward-thinking and forward-looking, so there's still too much confusion here for me at the moment. So the one thing that you do need to just pay attention to is this daily bar. That is an inside bar, but it's also a range bar. So inside bar, look at my oscillators. On the 150 EMA, which is right here at 34.027. So the big question you should be asking yourself is this a rejection or another leg down? Okay, and when you look at this on the daily, that is the picture that is pretty much the loudest or the brightest, should we say. However, when we start drilling through the time frames, this is when the confusion comes in. So you can see a massive rejection bar here, but then that's followed by an engulfing bar. We're battling with this 33.925 area. And we got below it, and then we sort of stayed above it. So this zone is clearly something we need to pay attention to, and we'll look at this on the lower time frames now. This trend line that I have in here, I think it is important to keep it in. You can basically delete the top one, and I'll tell you now why. So this head and shoulders are still in play. It's pretty much in play until the head gets taken out. You could form a bigger shoulder here, but it's typically in play until that happens. Now, the big question is, where is the neckline? Because is this a break and to retest the neckline? But then this pin bar gives you the wrong information. Moving averages are crossed over, pointing up. Oscillators are kind of flat, so there's nothing really there. But if I get down to the hour, you see complete confusion yesterday. So we did get going, but then the sellers came back in. There was a good opportunity down here on the lower time frames. I'll show it to you now. But this weekly gap is still open. There's just so much going on here. So for me, it does look like we're going to wait for the majority of the earnings to be out for the Dow, which basically means into next week, before we pick a direction. But then I think we're probably going to tread water while we wait to see what the tech stocks do. So tech stocks are laying off staff. I think LinkedIn was the latest one yesterday, which announced that they're laying off 600 people. So tech stocks are feeling the crunch at the moment. So at the moment, that's kind of one of the areas you need to pay attention to. But I think retailers and banks is the other area. It's probably the key one because that impacts all of us. So, if spending is going up, the economy should be getting stronger. Bad debt is going down, and people can afford to pay their loans. Then, economy is starting to get stronger. So if bad debts are going up, where people can't pay their loans, that's a problem. And obviously, if the luxury goods sales are declining, it means people don't have free cash to spend. They're not spending. Savings rates are going up. That's good. There's a whole lot of little metrics that you need to look at, and just think of it logically from your own budget, your own personal budget perspective. So, where are you tightening a belt or are you spending? That's kind of what it is. If you're spending, and everybody else is spending, economy is going up. If you're tightening a belt, then and you're not taking on debt, etc., then the economy is going to squeeze and we're going down. So that's kind of the confusion that we have here. Nobody really knows which direction this is going to go at the moment, and especially when you're above and below moving averages like that on the 15-minute. Strong move up, and as I said, there was an opportunity right here. I'll put this one in here. Sorry, just give me one sec. There it is there. So you can see beautiful engulfing bar off that, and the level I was looking for was a lot higher. Well, not a lot higher, but it was up there, and we failed to get there. Just came back into this area, so that was a null and void trade. But anyway, we're in amongst the moving averages here on the 50 minutes as well. Look, my oscillators, they've crossed the upside, so that's indicating move down. Keep this bottom trend line in, because if you get a break below that, so it's basically going to be the low of yesterday at the moment. If you break and retest that, then there is definitely merit for saying we're going to have a bigger move to the downside. But until that happens, I'd sit on my hands, to be honest. And if you just look at the DAX, I definitely don't want to be looking for shorts on the DAX. There's just too much support on the weekly to the left, and the S&P's also got some fairly strong structure that support would come off as well. So I'm kind of in two minds here as whether you even want to be trading this at the moment. And lucky for me, I'm on a road trip, so I'm not going to be able to trade anyway. So it's probably a good thing. I think the wise thing at the moment is to keep your money in your pocket and just wait for a better signal. And if I look at the weekly, there's a mixed bag here. So there's divergence here. This could be a swing low for a move up, or this could be a break of structure, which is right here where these levels are. If you look left, see there, reject that for a continuation down. So we're in kind of a no man's land at the moment. So my advice right now is, if you have the time, watch what price is doing and try and anticipate where your levels are. Try and anticipate where the buyers and sellers will come in, and use it as a learning experience rather than trying to risk your money. Because I think when the structure's like this, it's pretty much a guarantee that it's going to take your money rather than allow you to do anything. Okay, anyway, I'm sit on hands and not going to be seeing you until Tuesday next week. So that's kind of my lot. So I'm being forced not to trade, which is probably a good thing. And we will catch up with you next week. Enjoy the rest of your week. Stay safe. Don't take any risks here. And we'll catch up with you next week. Cheers for now.